Gautam Missina Roy joins us now. Gautam, good morning. Thank you for joining us. I'm sure you would also like to react to the fact that we are at 10K on Nifty.
Yes, it's a very happy feeling indeed. We as market participants, we have waited for this number, to see this number for a long time. It finally happened. And already I'm thinking about whether the journey onwards could be, what kind of compounding we could see. Because historically we have seen 15 to 17% kind of index compounding over long periods of time. That going forward would be a function of the inflation and the real GDP growth and all that. So I think even if we are in the early teens kind of compounding going forward, that is something which is very doable. So anywhere between next 15 to 20 years, we should be another 10x or 1 lakh Nifty. So as long-term investors, that is something to look forward to. And then of course, how much alpha as fund managers we can add to that will really eventually decide what kind of wealth creation happens for our investors. This is indeed a very momentous event, although psychological more than anything else, but still very, very interesting for us.
So a lot is also dependent on market psychology, behavioral science, as investors like to call it. If you start spending some time above 10K, do you think that will force a lot of naysayers and fence-sitters to look at markets once again? The cry for correction continues. I mean, this is a market where everyone is excited because markets are higher, but nobody is happy because no one has participated.
Actually, if we look at the amount of retail money which has come in the market, it clearly tells me that a lot of people would have participated. And I am seeing that trend happening again, that a lot of people who have been away from markets for a while, who have not participated in that rally, are coming back. My only message, only humble request to such people is that if you are coming in today, come in good funds, come in good vehicles, and come in for the long term, at least with a 3-year outlook in their mind. Because what happens is, we are at very high valuations, we cannot escape that. And when you are at such high valuations, you have seen the upside volatility in market last 3 years, there is room for correction. And what happens is, people who come in here typically after seeing that correction have a really bad experience about markets and tend to run away. And that is the behavioral aspect that we want to prevent. That's why we are telling people that please come in for at least 3 years. Then you'd be at least be making some money out of markets. Of course, if you stay for 5-10 years, your return should be reasonable. But don't come in without a 3-year perspective in mind today.
So Gautam, whereas we know that you run a fund which is centered around quality stocks and which is centered around earnings predictability, of late I've seen that the market risk appetite has also changed. JP Associate, GMR, GVK, I won't use the word penny stocks here because these are respectable market cap companies, but the way markets are approaching and perceiving risk, that also is changing.
Yes. So markets, especially in a time of euphoria, tend to, the risk appetite of markets tend to go up, and they tend to go down the risk curve. And that's a phenomena we have seen happen again and again whenever liquidity flows have been very good, volatility levels, or VIX as we call it, is low. So that's the kind of time when risk appetite is higher, hence the higher beta stocks tend to do well too. So people start buying into those hope trades. We have seen that phenomenon again for sure. But this is not the first time, of course, that we have seen it. We have seen it happen again and again in these kind of conditions. So these are the kind of conditions out of which a negative shock event, if it comes, creates a really sharp impact on market, a sharp downside impact on market. So as a market participant, I would be wary about that from a near-term perspective. If there is a sharp, unpredictable macroeconomic development, that could really lead to a correction, a sharp correction in the market.
So, at a pivot point like this, Gautam, one always wonders, what should one do next? Where should one deploy fresh money, and where is it that one should exit out of, or profit take, or maybe take at least partial chips off the table? As a fund manager, are you going to revisit some of your strategies in any of your portfolios at 10K? Or do you think things would be as is for you even now?
I think what I am doing, Asha, is reducing the risk in my portfolio. So I am trying to buy more predictable compounding companies which are also relatively less expensive. Today everything is expensive, but there are stocks which are relatively less expensive compared to some others, and where earnings powered, earnings compounding is also stronger. So one thing is I am buying with a 3-year perspective, because with a 1-year perspective I do not know. The PED rating could be sharp enough to take away entire returns, right? There could be a negative return situation also. So that's why I am just focusing on a 3-year perspective, looking for predictable, strong earnings companies and buying them with a 3-year prospective returns of, let's say, 15% in mind.
Okay, Gautam, great speaking with you. Thank you so much for joining in today. Celebrating 10K, yes, you could crib about the fact that it was just at best a touch and go moment with 10K, and ever since then we've eased off, much in line with the rest of the globe and looking absolutely flat at 99.70. But that's okay. We've got a new reality for the index, which is the magical 10,000 mark. It's a 5-digit figure index now. Let's also talk